It's still at a very high level. Looking at the European manufacturers, it's the best month since the debt crisis. For Germany, factories growing at the highest rate or the best rate in 3 years, even if it's a tad lower. The PMI is again showing us that the Eurozone economy is actually in a very good shape entering 2017. Also, though very interesting, it's the price component here in that PMI. It also shows that price pressure is increasing, and that's also a very positive sign for the Eurozone economy, and could give the ECB more room as well to perhaps scale back the unconventional measures sometime during the course of 2017. For now, the bottom line or the message from the PMI is the new year starts on such a good note as the last year actually ended. Manufacturing looks good. The service sector is a little bit on the decline in Germany, but it's still in expansionary mode. And also France is looking surprisingly good, which is actually a very positive sign, as it was the sick man, so to say, for so many years.
Okay, Annette, thank you very much. Let's get back tomorrow midweek to continue the conversation from Frankfurt Stock Exchange. Thank you. I appreciate that. Okay, look at Wall Street, where the U.S. stocks index futures pointing to a higher open today. Right now, the Dow Jones Industrial Average futures about 19,740, about 0.03%. The S&P futures now a little bit flat. Earlier, it was about 0.07 in the green, and the Nasdaq futures 5068 plus 0.09%, but that is still holding steady somehow around 0.07%. That's a lot of head scratching today, but again, with a meeting with the three automakers and the purchasing managers index report later out today, 9:45 in the morning Eastern time. Existing home sales in the U.S. data is also out today. Richmond Fed survey also out at 10 o'clock Eastern. On the earnings front, we're expecting to hear today from Johnson & Johnson, Alibaba, Texas Instruments, Alcoa, Capital One, Discover Financials, and a raft of others. Keep your eyes on Wall Street, the world's #1 stock market. Asia ends today's session mixed as the dollar remains soft and uncertainties around U.S. new President Donald Trump's policies and his withdrawal from the Trans-Pacific Partnership trade deal. In South Korea, the Kospi finished unchanged at 2,065. The Japanese Nikkei 225 was down 0.5%, extending the previous session's declines. In mainland China, the Shanghai Composite was 0.2%, and the Shenzhen Composite down about 0.30%. The Australian ASX 200 was higher by about 0.75%, again because the rally in metal prices. Okay, we will get to talk about the story from the IMF, but let's get a bit of a sense of today's announcement by Nigeria's Central Bank Governor Godwin Emefiele within the hour about the decisions of the committees sitting since Monday. Let's get how the debt market's looking at fixed income trader from Citibank. Shewameye, good afternoon. Thanks for coming through on the program.
Good afternoon.
How closely are you watching this afternoon's communique from the central bank?
Well, the market is expectant, but basically most of the opinions I've sampled is that they do not expect much change in the policy stance for now. The situation we are facing is very difficult. It's stagflation, so hiking rates could halt growth. While on the other hand, loosening itself could make inflation go worse. So I think a lot of market participants just think that they are just going to hold this MPC.
But were you surprised at the rally yesterday at the Treasury bills market? Quite aggressive.
Not really. Treasury bills market responds a lot to the liquidity in the system. So whenever there's liquidity, it's typical of banks or fund managers to try and put that liquidity to work. So really, I wasn't really surprised. Overnight was depressed yesterday. So rather than placing overnight, at least they'll buy short-term T-bills.
Do nothing today, leaving all the parameters unchanged. How does that affect pricing of Nigeria's Naira bond papers moving forward?
Well, I don't think it's. I think at this moment the market has priced in a no change scenario. So if they did not do anything or change any metrics, it will not be a surprise. So therefore, I don't think you're going to see much shift from what's going to happen in the market.
Okay, so I will just sit back, have a nice time, and then wait for the decisions to come at 2:30. I'm sure you're watching that. Whether there's a movement up or down is something everyone watch. Thank you very much, Shawamaye from Citibank, downtown Lagos. We appreciate that. Now, the managing director of the International Monetary Fund, Christine Lagarde, today starts a tour of 3 countries: Central African Republic, Uganda, and Mauritius. That trip will start from today till February the 1st, about 1 week. During her visit, Ms. Lagarde will meet with senior government officials, the private sector, members of the parliament, civil society groups, women leaders, and students. She will also deliver keynote speeches in each of the countries she's visiting, including at a conference on cross-border banking and regulatory reforms in Mauritius. Now, guards and officials at major ports in Libya's eastern oil crescent say they're hoping foreign workers will soon return as they struggle to build on output gains with meager resources. The National Oil Corporation reopened 3 ports in the curve of coastline south of Benghazi in September after the Libyan National Army, led by Khalifa Haftar, seized them from a rival faction. Sticking with the world of oil, Africa's number 3 oil producer, Equatorial Guinea, has presented an offer to join the Organization of Petroleum Exporting Countries, OPEC, and that will be in 2017, while it has agreed to production cuts. If Equatorial Guinea was to join OPEC, it will become the group's 14th member and the 6th from Africa, further raising the continent's influence and profile in the corridors of global oil production and pricing. The offer was made when the country's Mines and Hydrocarbons Minister, Gabriel Mbanga Obiang, traveled to Vienna to meet with OPEC officials. Equatorial Guinea was one of the non-OPEC nations that signed up to those production cuts last September. We'll take a break. When we come back, we'll continue with the world of oil, this time still in West Africa, Gabon.